It has been an absolutely wild week. Silicon Valley Bank collapsed on Friday, Signature Bank collapsed on Sunday, making that the second and third largest bank failures in U.S. history, and we're not even done yet. First Republic Bank just got downgraded to junk status, and Credit Suisse over in Europe appears to be in really, really big trouble, leaving people with a lot of questions about where the economy is heading. But today, we're going to answer one big question for you, and that is, will the bank collapse impact the housing market? Happy Wednesday, everybody. It's Brian Simmons here with eXp Realty in Southern Oregon. It is March 15th, about 9 a.m., and I'm telling you the time because the news is flowing so fast that by the time I publish this video, there may be even more crazy news that came out. So just put a little timestamp on things for you. If you could do me a quick favor and just click that like button, hit the subscribe icon, and share this video with anybody you know looking to buy or sell real estate in Southern Oregon, I would really appreciate that. I'm going to answer the big question right away. So if you're looking for the normal data that I provide about the Southern Oregon housing market, I'm going to put that at the end of the video this week. So the question is, will the bank collapse impact the housing market? And the answer is absolutely yes. It has to. There's no question. How will it impact the housing market is another question, and we're going to discuss that quite a bit. So when bad things are happening in the banking sector, investors like to yank their money out of the banks and put it into the safest place that they can. And one of those places that they could put their money is in treasury bonds, okay? And when a lot of people want to buy treasury bonds, the yield that those bonds pays out goes down because there's so much demand for the bonds that they don't have to provide a high yield. They can offer a lower yield and still get a bunch of people buying them. Okay, so when that yield goes down on the treasury bonds, mortgage rates tend to go down with them. That's just kind of the natural relationship that those have. Mortgage rates go down when treasury bond yield goes down. That is probably why we saw mortgage application volume go up for the second straight week, despite all this crazy news about these things happening. So mortgage rates go down. More people are applying for mortgages. Investors are pulling their money from the banks and putting it into safe investments like treasury bonds and real estate. So demand is going up for housing and all's good, right? Not necessarily. And here's why. Because people watch the dang news and they get all these doom and gloom stories that affects sentiment, which is how they feel about things, okay? And how they view a particular situation. So if you hear on the news that the banks are failing, the banking sector has all these problems, and the sky is falling, and on and on and on, does that make you feel like it's a good time to go out and buy a house? Whether it is or isn't, generally the answer is no, because people don't feel that. People are scared, and they're thinking about their job security and what happens if the economy tanks and if we go into a recession, and the news is simply fanning the flames of those fears. Okay, and that fear is what causes people to make a emotional decision to freeze and wait it out. And that's what we see happening quite a bit, for better or worse. If we look at the facts and the data of how these different markets interact together, there's really a lot of good news that we should expect for the housing market as a result of the banks failing. It sounds counterintuitive, but that's kind of how this works. Like I mentioned before, lots of money should be flowing out of the banks and into treasury bonds and to real estate because they're both very, very safe investments, some of the safest investments you can have in the entire world. And both also increase the demand for real estate. Okay, when big institutional investors start buying up real estate, that increases demand. When bond yields go down because there's so many people buying bonds, that causes mortgage rates to go down. And that generally means more buyers want to get into the market and buy. So there's more demand on that side as well. The Fed and their battle against inflation is a key component here and what I think is the X factor. The Fed meets again on March 22nd, and that's when we'll find out whether or not they're going to hike their rates further or pause. If we see the Fed come out and say that they're going to hike rates again even higher, it could cause even more turmoil and even more fear amongst buyers, and we could see people freeze even more. If we see the Fed come out and say that they're going to pause, and instead of hiking rates, they're going to just stop with where we're at, we could see mortgage rates come down quite a bit. We could see a lot more buyers enter the market. Demand would go up, and it could cause a big boom in the market, a good boom. So there are really a lot of ways that we could see this all play out, and we'll know more about that after their meeting on March 22nd. So make sure you click the subscribe button down here so that you don't miss out on my update after that meeting. Now, let me give you an update on how the housing market in Southern Oregon itself is looking. As of this morning, we had 809 active single-family residential listings between Jackson and Josephine counties of Southern Oregon. We saw 86 new listings hit the market in the last week, 72 price changes, 27 came back on the market, 94 went pending, which is awesome to see. 62 closed, and 23 either expired, withdrawn, or canceled. And that brings us to about 13 weeks worth of inventory if we were to look at just a snapshot of that 1 week. So that pending number is fantastic to see. That's a big number, the second highest number we have seen all year so far. And that breaks the streak of a downward slide that we've been seeing in pending. I'm wondering if maybe that slide that we were seeing is simply a result of the bad weather that we had, where we had all the snow and things going on, where maybe there was just not as many people going out and seeing homes. That very well could be the case. It wouldn't surprise me at all to see the pending transactions continue to pick back up every week now that we're getting even more into the busy season. We got past that bad weather, and now we have this kind of turmoil with the banking that could lead to mortgage rates coming down. So I wouldn't be shocked at all to see that pending number continue to shoot up, or at least stay stable in the mid to high 90s. And I would also expect to see the inventory number drop. So we'll keep an eye on that. If you like this video, here's another couple I think you'll enjoy. Don't forget to click that like button, hit the subscribe icon, and share this video with anybody you know looking to buy or sell real estate in Southern Oregon. And I'll see you next week.